Okay, for this lecture, we're going to talk about the Committee on Sponsoring Organizations, or COSO. So what is COSO? Well, it's the Committee of Sponsoring Organizations of the Treadway Commission, is a joint initiative to combat corporate fraud. Okay, cool, but what's the Treadway Commission? Well, that was a special committee formed in 1985 after there were lots of major frauds going in the 1980s related to publicly traded companies like Crazy Eddie's, and to investigate the underlying causes of the fraudulent financial reporting. So it was named after its chairman and former SEC Commissioner, James Treadway. The Commissioner's report, published in 1987, stressed the need for strong and independent audit committees for public companies. Notice it said public companies. The Treadway Commission was originally sponsored and jointly funded by 5 major professional accounting associations and institutes based in the United States: the AICPA, American Institute of Certified Public Accountants, the American Accounting Association, the AAA, the Financial Executives International, FEI, the Institute of Internal Auditors, IIA, and the Institute of Management Accountants, the IMA. So let's get back to COSO. The Committee of Sponsoring Organizations has published several studies on fraudulent financial reporting. These studies provide insights based on companies that have been cited in an SEC Accounting and Auditing Enforcement Release, an AAER. I know. What's an AAER? Well, these are all the documents related to actual SEC violations in the different reports that they've gone through. In fact, if you look in there from 2003, because they go back all the way to 1999, you'll see Parmalat, which I had mentioned in a previous video. Okay, again, let's get back to COSO. So they have released several studies and guidance. The report of the National Commission on Fraudulent Financial Reporting, that first one in October of 1987, that set the standard for everything. A few years later, they released the Integrated Framework for Internal Control, 1992. And when Enron happened in 2001, COSO was right there to come up with that SOX compliance framework. In 2006, they actually released guidance about smaller public companies because SOX wasn't really covering all that. And then they have evolved to the ERM, or the Enterprise Risk Management. And you're like, what's ERM, or Enterprise Risk Management? Well, that's for another lecture. Remember, this is an intro to COSO. So again, let's get back to COSO. They've released a couple of major studies on fraudulent financial reporting. And some of their major findings in those studies, well, the total amount of fraud during 1998 through 2007 was more than $120 billion spread across 300 companies. The median size of the company perpetrating the fraud rose tenfold to $100 million during 1998 through 2007 period as compared to the 10 previous years. So you're thinking, hey, all this came out, all these rules, and yet we're seeing an increase in fraud in that 10-year period, which led right up to the financial crisis. Boy, that doesn't make sense. Well, in a way, you're right, and that's why they have to keep going and keep putting out more control legislation and rules so that we keep shutting these things down. So heavy involvement in the fraud was by the CEO or the CFO. And the most common fraud involved revenue recognition, hence the revenue recognition reforms that have come out in the recent years. 1/3 of the companies changed auditors during the latter part of the fraud, and the majority of the frauds took place at companies that were listed on the OTC, or the over-the-counter market, rather than those listed in the New York Stock Exchange or NASDAQ. Commonly cited motivations behind the frauds, according to COSO studies, were the need to meet internal or external earnings expectations, an attempt to conceal the company's deteriorating financial condition, a need to increase that stock price, the need to bolster financial performance for pending equity or debt financing, and a desire to increase management compensation based on the financial results. Well, I hope that introduction to COSO has been helpful. The Committee on Sponsoring Organizations will definitely be part of your life if you decide to choose a career in auditing.